The price of Bitcoin is $30,266, and if you've not guessed it yet, I am back in the office and we are back to business. Unfortunately, Bitcoin today is not back to business, nor is my main computer, because I've not plugged it in yet. Either way, we need to talk about what's going on currently with the price of Bitcoin. Why did this drop happen today, and what can we expect will come of this? Because this drop actually happened on positive news. I'm going to explain that positive news for you right now, which is the private sector companies added more than 497,000 jobs in June, more than double the expectations, and that, of course, it caused Bitcoin's price to drop. Of course, it caused the stock market to drop. Bitcoin is getting led by the stock market right now. And if I had to show you the stock market chart here on the 5-minute chart, when that jobs report was released, the Dow Jones index dropped by, I can measure this for you right here. The total drop from bottom to top there was 1.5%. That's a pretty significant drop from stock market standards, certainly. That's a multi-billion-dollar drop in the value of the stock market. Now, the question is, why does the stock market drop on good news like 497,000 jobs being added? Well, I'm going to explain that to you as well in today's video. If you wouldn't mind, drop a like on this video, subscribe to the channel, turn on those channel notifications again. Very important that you do that. Let's try and get one like and one comment. Just one. That's all I want, and I'll be happy, boy. And let's crack straight on with today's video. And of course, we've got a lot of things to discuss today. Now, why does a stock market drop happen off of a positive jobs report? Well, this is all a lot to do with inflation and the way that inflation works. If I'm to explain that to you, basically, we have not had a rate hike in the past month. There was no rate hike. That was bullish for the markets. When you have decreasing unemployment, that means that there is more of a high potential for a rate hike. Now, I've not actually got it loaded up on the screen here, but I'm just going to load it up on the screen here. Rate hike, Fed watch tool. There we go. Let's have a look at the Fed rate hike watch tool. What is the percentage likelihood that we have a rate hike in the next month? There we go. It's now shot up to a 91.1% chance of a hike in the next month. And this is all to do with this positive jobs report. That has, of course, caused the stock market to decline, because good news means bad things happen for some reason. I mean, there is maths behind it. Maths would say, well, if a rate hike is more likely, that means people are less likely to invest in speculative assets like Bitcoin, like Ethereum, like the stock market. And for that reason, prices go down. This ultimately, though, is not going to play out for a while yet. If we look how long there is until the next rate hike meeting, 19 days and 20 hours. It's news that will probably be forgotten about by the markets by the time of the next Fed rate hike. And of course, yeah, people are going to be paying an eye on that. But it's not going to affect things too much going forward, I wouldn't have thought, for the next month. Really, what we need to be looking at right now is some technical analysis on the price of Bitcoin, on the price of Ethereum, and of course on the stock market as well, to assess what is currently going on with these markets and how can we expect prices to perform. Well, it's pretty clear to me Bitcoin still remains within this bull flag formation. If we are to lose the level of which we set to the downside today, this level right here, approximately around $30,000. Look, if we start trading a 4-hour candle below that $30,000 level, it is likely at that point in time that we then start dropping back to the downside and potentially come down and revisit the level here of $28,000 before looping back around to the upside and continuing that bullish momentum once the next Fed rate hike meeting has happened. However, until then, it doesn't seem still very likely that we're going to lose this level. If anything, this is more people getting wrecked that are entering their positions too high above this level here. As I discussed in yesterday's video, I wouldn't be going long until we broke and closed a 1-hour candle above the level of $31,500. Well, we broke $31,500, but we didn't close an hourly candle above it. Then we dropped immediately to the downside, losing some significant value of the price of Bitcoin. I want to point out as well, I didn't see any of this because I was on a plane. So in terms of Bitcoin's current drop today, the worst point, it was down nearly 5%, which is a very, very significant drop. If anything, the bulk of the selling pressure at this point in time you would expect would be over. This is not something that we haven't seen in recent times as well. We saw another 5% drop here and another 4% drop here. Every time we get into this $31,500 level, we're dropping down pretty significantly. And that's because if you look at it on a higher time frame, this $31,000 level, there is no other resistance then until you're getting up to around $37,000. It's not going to be an easy level that Bitcoin is just going to pass straight through. This was ultimately a defining level. If you remember In fact, I can show you on a chart. Like, why don't we just discuss this on the chart? If you remember, like bull run, 2018 or whatever it was, 2019, 2020, we had this massive bull run. Bitcoin's price goes up to $60,000. You can see here, we contested this level many times. Basically, we broke above it, shot to the upside, then dropped back to the downside. Tested that level here at $31,500, bounced up, came up to $60,000, $70,000, dropped all the way down, tested it a bunch more times here, and then bounced back to the upside. And then, this is when FTX went bust. It dropped to the downside very significantly. Since then, we've formed this cup and handle. So it's likely that we do again break back to the upside, but look how many times it took for us to test it. And if we've actually measured that period of time, how long that actually was, that period of time was a period of 75 days that we spent playing around with this level before we eventually broke back to the upside. If we look at how long Bitcoin has been testing this level now, again, if there's no rate hike, we definitely break that level. We've been testing this level now for 83 days or 85 days. So it's been a while, but it's not something out of the ordinary for Bitcoin to be playing with a level of resistance and struggling to break through it. So from that perspective, again, I'm not bearish. Maybe we're short-term bearish, but certainly things are looking more so better than not better. And if I was looking for long positions right now, I'd be cautious about longing these levels. I wouldn't be too bearish about it. I mean, I don't think this is the worst position in the world to open along at this level here and expect to bounce back to the upside. I mean, it's something that we've been doing time and time and time again. And we've got 20 odd days until the next Fed rate hike meeting, so there's no particular reason why you wouldn't expect the price wouldn't recover from this news today, even though it's pretty good news. The other thing to point out would be I'd have my stop loss for that position at $30,000. If we're going to break below $30,000, I'd want it to be short then to around $28,500, and then I'd be looking to go long around $28,500. So those are the two kind of trades that you could consider for Bitcoin right now. When it comes to the value of Ethereum, well, Ethereum's Bitcoin value has been tanking again, which is unfortunate. But again, these are what these rounding off bottom formations look like. It's not the worst thing to be looking at in the world when it's just a continuation of this solid downtrend. In terms of Ethereum's actual dollar value today, it's back down again at this level of support. But so long as we're holding this level of support right here, there is no real concern from my perspective. So again, I'm looking to long at these levels here around the current price, around 1,877. I'll place my stop loss just below the bottom of this level here, around $1,865. And if we lost that $1,865, I'd be looking to go long again somewhere around 1,819. Failing 1,819, then you're looking for a drop all the way back down to this lower level of support, somewhere around $1,751. Those are the things that you should be looking at right now when it comes to the price of Bitcoin versus Ethereum. And if we're looking at the DXY, again, the DXY suffered today on the jobs report news. It's been a very, very strange day. If we actually look at what happened when the jobs report came out, the DXY, the value of the US dollar, jumped up very, very significantly, around 1%, and then dropped all the way back down to where it started the day. This is not the sign of a strong dollar. This is a sign of a very, very weak dollar right now. So from my perspective, again, the dollar seems weak. Bitcoin has been strong recently. The crypto market has been strong. The stock market has been strong. That's a trend that'll probably continue for the next 20 days in the run-up to the next, I was going to say Bitcoin halving then, but it's not the Bitcoin halving, unfortunately. It is the CME Fed Watch tool telling, I've been on a plane today. I've got jet lag. Yeah, FOMC rate hike meeting. That's the words that I'm looking for. Is there anything else left to discuss today? Well, of course, we've got some crypto news. Bitcoin could easily hit $65,000 in 12 months and $125,000 by the end of 2024, according to Matrix Port, a story well worth reading on cryptosavingexpert.com. Bitfinex receives seized assets linked to 2016 hack. Again, more good news. Will Coinbase overtake Binance? This is a piece that you should definitely read about. It's a really interesting question of, will Coinbase become the biggest cryptocurrency exchange? It's a very, very long article. You should definitely give it a read. You'll learn a lot from it. And yeah, check that out. You'll find a link for Crypto Saving Expert in today's video description. The final story today being CFTC is likely to sue bankrupt Celsius and former CEO Alex Mashinsky. This is fantastic news. Again, it's good to see regulation being enforced properly rather than against companies that don't deserve this just crazy SEC regulation that's coming in right now. But overall, I'm not bearish yet. We've not lost those support levels. I will be going long at these levels, and I'll be placing my stop losses pretty close to my entries in the case that we do break to the downside. Overall, things are looking more so good than bad. Yeah, it's been a bit of a drop down day. That's a lot to do with this jobs report and the way that markets respond to these jobs reports, because everybody's speculating on whether inflation is going to go up, all these different things. Basically, the speculation is, look, more people employed, that means more people to spend money. 497,000 people is no small amount of people. That means there's more spending in the economy. More spending in the economy then could drive prices higher, and therefore you would expect more inflation and thus more rate hikes, or some kind of maths around that. So on that note, guys, do drop a like on today's video. I would appreciate it. Let's try and get one like. Let's get a comment down there as well from everybody watching, but the likelihood of that happening is pretty small. And if you are interested in trading, click on the tutorial on the screen right now. Thank you all for watching, and I'll see you in the next video. Goodbye.